If you're looking for a major gold resource company, undervalued, great equity position, and oh, by the way, I mentioned that 20 million in cash, and we're about to go into the next gold bull run. We know that because of the gold supply cliff and the demand that's going to come when we have the financial reset. So overall, good target for you. Do your own due diligence. I'm happy with them. I like them. Hey everybody, it's Rob Keynes with GLDG. It is Monday, January 3rd, 2022. Can you believe it? We have made it successfully to the new year. And we are back, of course, on a Monday for the Mining Stock Monday series. We've been running here for the last several months on the channel. And the point of this series is to get you introduced to some of the mining stocks that you may want to take a look at for your portfolio as you do your own due diligence, and also to talk about the supply chain and other things that affect the valuation and availability of assets. I have a company here today that I wanted to do a review for you, and we're going to make this short and sweet. We're going to go over the high points and the positive points that we think the company has, and I think the value proposition will become very apparent as you guys take a look at it. We'll go right into the presentation. I prepared a short one for you today. It's Gold Mining Inc. It trades on the New York Stock Exchange, GLDG. The first thing I wanted to point out here is that not many gold and silver stocks trade on the New York Stock Exchange. In fact, not a whole lot of them trade on any of the primary American exchanges. You can get them on the Toronto Stock Exchange Venture a lot of times and on the OTCs here in the US. Gold Mining Inc. stands out because they were big enough to get listed on the NYSE. So they're a pretty serious player. And as you'll see, they have a pretty serious amount of resources if you're interested in investing in a potential major. So here's the value proposition. Of course, as always, do your own due diligence. We're going to start off with the gold supply cliff chart from Crescat Capital, and 𝙆𝙄𝙀𝘾𝙆𝙎, who came on our channel. We interviewed him during the New Orleans Investment Conference. One of the charts he put together for this presentation was the gold supply cliff, and looking at the proven and probable reserves across the world. In other words, how much gold we actually have. And you can see this starts to fall off a cliff in 2028 and continues down through 2039, meaning we don't have a whole lot of reserves left. It starts to fall from about 45, 46 million of ounces all the way down to zero by 2039. Now, gold companies are actively out searching for new projects, but really because of the lack of resources in the next few years, we need companies that are able to provide a lot of ounces to the market, and companies that provide a lot of ounces to the market are going to have an advantage. And the company that I'm going to review for you today has exactly that. And not only does it have it, but it has a really bargain basement valuation. We're going to show you historically what this is worth during the last gold bull run. And I think you guys are going to find it pretty interesting. From their corporate presentation, here are their assets and locations. You can see that they have properties up in North America, in the United States and Canada, in Whistler, Yellowknife, and Almaden. They also have quite a few in South America as well. You can see on the chart that gold equivalent 16.2 million ounces measured and indicated, and 16.2 million ounces inferred. That's 32 million ounces. That's larger than most of the gold mining operations that you'll find in the world. This puts them in an elite category in terms of ounces in the ground. Now, we'll point out that these are equivalents. They actually have gold, silver, and copper, which is a good thing because silver and copper are going to do very well. Copper is in a raging bull market right now, and I think copper has the same issue that silver is having right now, is a lack of supply, and that gold will have in a few years, which is a lack of supply. So I think the outlook for all three metals is very positive overall, and I think that's very positive for the company. So we're going to do a little exercise here. I wanted to talk about valuation of gold in the ground. One of the ways that you can quickly value and explore somebody that hadn't really developed their mind yet, but is accumulating ounces, is what does it cost you right now to buy that ounce of gold in the ground? In other words, what are you going to pay for that ounce of gold in the ground, or what is the valuation of that gold in the ground? So I've got a little bit of an exercise here in order how to do it. You would take basically the market cap of 200 million divided by how many ounces they have, which is 16 million ounces, and it give you a number. That would be the basic 200 million market cap, meaning the price of all shares available in the market divided by total ounces in the ground. That'd be 200 million divided by 16 million ounces. But we don't really want to do that here because gold mining has an equity position in Gold Royalty Corp, which is one of the fastest growing, if not the fastest growing royalty corp in the world. And that equity position is 122 million. So if you really want to value ounces in the ground, you have to say, wait a minute, they have this huge asset on the books of 122 million. That's going to grow as gold royalty grows. That really is should be taken out of the overall market cap, because that kind of stands on its own. That's a marketable security. That's a marketable asset, right? So we subtract out that 122 million and we have 78 million left over. So sans the gold royalty position, that equity position, the market cap of Gold Mining Inc. is at 78 million just for their assets in the ground. If you take that 78 million, as you see down here, 78 million divided by their 32 million ounces indicated and inferred, it would give you a price of $2.44 per ounce in the ground. Okay, $2.44 per every piece of gold, every ounce of gold that they have in the ground, or gold equivalent. That's amazing. That's a really cheap way to get gold in the ground. Even if you add back in, if you ignore the GROY position and you say the market cap is 200 million divided by 32 million ounces, you're still getting about $6 per ounce on the ground, which is insanely cheap, because what is gold trading for right now? It's over 1,800 at the end of last week. Okay, you would get it at most $6 in the ground, but really, if you take into account the gold royalty equity position, take that out, the market cap just for the projects that Gold Mining Inc. has, sans that asset, that the gold royalty asset, is only 78 million on today's prices on Monday, January 3rd, 2022. That gives you $2.50, 244 cents per ounce in the ground. A cheap way to get gold ounces in the ground. In other words, if you're investing in the mining stocks, you want to get in as cheaply as possible, especially with a big company that's listed on the New York Stock Exchange, because you know they're likely to do very well because not many are listed. But it gets better. And here's the third point that I wanted to make. Between 2010 and 2012, you guys remember we had this major bull market in gold, and the gold went up to 1900, previously the all-time high. When gold stocks last saw a massive multi-year bull market, meaning it was a sustained bull market, we knew it was up, the generalists were getting in, and everybody was excited about gold. The value of the companies that Gold Mining Inc. acquired their projects from, their existing projects, in that bear market that followed, was 850 million. So in that 2010, 2012 year time frame, the value of the assets that Gold Mining Inc. had was 850 million. Okay, what is their collective market cap right now? 200 million, but if you take out gold royalty, it's only 78 million. So excluding the GROY position that is alone worth 122 million, the other projects are valued at 78 million, 90% less than 10 years ago. There's been a 90% discount to these projects that Gold Mining Inc. has. That's why you're able to get them for $2.44 per ounce on the ground. Okay, remember, the first rule of investing, well, the first rule is don't lose money. How do you do that? You buy low and you sell high. What are you doing with Gold Mining Inc.? You're buying low on a New York Stock Exchange listed property. On a gold mining company that has assets all over the world, we'll go back to the map, assets all over the world, 32 million ounces, that puts them in elite category. You're buying them cheap in the next gold bull run. Why are we going to have a gold bull run? Because look at the gold supply cliff. We don't have enough ounces. Companies that have ounces are going to do very well in this gold bull market. That is Gold Mining Inc. And they're undervalued. You're getting for cheaply in the ground. That is the value proposition of Gold Mining Inc. Thank you guys so much for watching the video. That's going to wrap it up for today. Just want to restate real quick a summary of that proposition. Gold Mining Inc. is New York Stock Exchange listed. Great management team. We've covered that in our last video. Please go back and see that last video we did last year. They have really cheap ounces in the ground that previously were valued at almost $1 billion. Now they're trading at 90% less. Okay, definitely undervaluation. They also have the equity position in GROY on one of the fastest, if not the fastest growing gold royalty company in the world. There are lots of things to like. There are other things to like about the company too, but that's enough. That in itself is a huge value proposition. So if you're looking for a major gold resource company, undervalued, great equity position, and oh, by the way, I mentioned that 20 million in cash, and we're about to go into the next gold bull run. We know that because of the gold supply cliff and the demand that's going to come when we have the financial reset. So overall, good target for you. Do your own due diligence. I'm happy with them. I like them. I do cover them for those that support us on Patreon on the Mining Stock Tracker. I just updated that on the Mining Stock Tracker as well for you guys. If you're one of the supporters on Patreon, go, and I have a deeper review of that. You can go to Patreon and get that information. But I think, pretty good target for you. Again, this has been Mining Stock Monday on goldsilverpros.com. First video of the new year. Thanks everyone for joining. Appreciate it. You guys have a great one. Thank you guys so much for watching today's video. We appreciate it. Please remember to like, subscribe, and share, and hit that notification button so you get those notifications when new content comes out. If you like what we're doing here, please consider supporting us on Patreon. Those members of Patreon will get extra special content delivered to them as well.